Imagine a number so large it's almost unfathomable, $6.1 trillion. This figure marks a seismic shift in the global economy, quietly orchestrated by China. For decades, the US dollar was the world's default currency, underpinning trade, oil, and finance. This gave America unrivaled influence, but also created vulnerabilities for others. In the late 2010s, China began moving trillions in trade away from the dollar, seeking economic independence. This wasn't just about money, it was a strategic move to reduce reliance on a rival's currency. China's leaders saw the risks of holding vast dollar reserves, especially as the US used its currency as a tool of foreign policy. The dollar trap became too dangerous for Beijing to ignore. The $6.1 trillion pivot is more than a financial maneuver. It's a challenge to the world order established after World War II. When a powerhouse like China changes course, the effects ripple across the globe. This story is about how and why this shift happened, and what it means for the future. Understanding this moment is key to understanding the next era of global economics. In 2018, the fragile economic truce between the US and China shattered. The Trump administration imposed sweeping tariffs on Chinese goods, aiming to rebalance trade and address grievances. These tariffs disrupted global supply chains and sparked a tit-for-tat trade war, but the real impact was psychological. China realized how vulnerable it was to US policy. The US threatened not just trade but access to its financial system and the dollar itself. For Beijing, this was a wake-up call. The message was clear: as long as China depended on the dollar, it was exposed to American leverage. The tariffs accelerated China's push to build an alternative financial system. Instead of bringing China to heel, US policies pushed it to double down on independence. The trade war became the catalyst for a financial revolution. China's response set the stage for the $6.1 trillion shift. The era of engagement gave way to open competition. The world's economic landscape would never be the same. China's massive dollar reserves once symbolized its economic might. As the world's top exporter, China earned dollars and recycled them into US government bonds, deepening financial ties. This arrangement kept US interest rates low and fueled global trade, but it was a golden cage for Beijing. The US dollar is the backbone of global finance, giving Washington the power to sanction and freeze assets worldwide. China's leaders realized their reserves could be weaponized against them. The trade war made this risk impossible to ignore. Threats of delisting Chinese firms and restricting financial flows underscored China's vulnerability. The solution? Reduce reliance on the dollar and build a parallel system. China began seeking new ways to settle trade, convincing partners to use the yuan or other currencies. Breaking free from the dollar's grip was daunting, but the risks of staying put were greater. The golden cage had become a liability. China's leaders decided it was time to act. The goal shifted from managing reserves to actively reducing dollar exposure. The pressure from Washington provided the urgency. The stage was set for a new financial architecture. China didn't just complain, it built alternatives. The centerpiece, promoting the yuan for global trade and investment. China signed currency swap agreements with dozens of countries, bypassing the dollar. The Belt and Road Initiative became a vehicle for exporting not just infrastructure, but the yuan itself. Loans for ports and railways were increasingly denominated in yuan, creating demand for China's currency. Trade with Russia, Gulf states, and Southeast Asia began shifting away from the dollar. China established yuan clearing centers in major financial hubs, making non-dollar transactions easier. The strategy was patient and deliberate, chipping away at dollar dominance, not overthrowing it overnight. For countries wary of US sanctions, trading in yuan became an attractive option. The $6.1 trillion figure reflects years of building this new ecosystem. China offered the world a choice: join a new financial network, or remain tied to the old one. The global currency landscape was starting to change. The new Silk Road was as much about money as it was about trade. China's next move was digital, the eCNY, a central bank digital currency. Unlike Bitcoin, the digital yuan is state-backed and designed for both domestic and international use. It bypasses the US-dominated SWIFT system, making transactions faster, cheaper, and invisible to American oversight. China piloted the digital yuan in major cities, building infrastructure and user adoption. The goal used the eCNY for cross-border trade, especially along the Belt and Road. Trials with other central banks are already underway. The digital yuan could give China a first-mover advantage in digital finance. For countries seeking to avoid US scrutiny, it's a compelling alternative. The US has been slow to develop its own digital dollar, giving China a head start. The digital yuan isn't just new money, it's a strategic tool in the currency wars. It could further erode the dollar's share of global payments. The future of finance is being rewritten in real time. The shift away from the dollar became undeniable with a series of high-profile deals. The most dramatic, China and Russia settling trade in yuan and rubles, slashing the dollar's share in their commerce. This was a direct challenge to dollar hegemony, and proof that alternatives could work. The world took notice. If China and Russia could bypass the dollar, so could others. China also launched yuan-denominated oil contracts, challenging the petrodollar system. Quiet negotiations with Gulf states followed, with oil increasingly priced in yuan. These moves struck at the heart of the dollar's power. Central banks worldwide began diversifying reserves, slowly reducing dollar holdings. The turning point wasn't a crisis, but a series of decisive actions. The global financial system had crossed a threshold. The era of unquestioned dollar dominance was over. A new multipolar currency world was emerging. China's $6.1 trillion pivot has real consequences for everyone. For the US, it threatens the exorbitant privilege of cheap borrowing and easy financing. As global demand for dollars wanes, US interest rates could rise, affecting mortgages, loans, and credit cards. For China, promoting the yuan brings more control, but also new responsibilities, like opening its markets and loosening state control. The rest of the world faces both opportunity and risk. More currency options mean less vulnerability to US-China disputes, but also more complexity and volatility. Businesses must navigate a fragmented system managing multiple currencies. For ordinary people, the shift could impact prices, investments, and economic stability. The dollar provided predictability. The new system brings uncertainty. The global economic map is being redrawn. The ripple effects will reach wallets everywhere. The transition may be bumpy, but it's already underway. The world is adjusting to a new financial reality. We're entering a new era, a multipolar currency world. The dollar will remain important, but it must now share the stage with the yuan and the euro. This isn't a zero-sum game, it's a shift toward a more balanced, complex system. The US now accounts for a quarter of global GDP, down from half after World War II. China is close behind. Countries and businesses will choose currencies based on their interests, not just tradition. The system will be more fragmented but potentially more resilient to shocks. Over-reliance on one currency created global vulnerabilities as seen in 2008. A diversified system could help contain crises within currency blocks, but it also means more complexity and potential for rivalry. The rise of the yuan is the most significant feature of this new order. China's success depends on further reforms and openness. The $6.1 trillion shift signals a determined bid for global financial influence. The world is moving from unipolar to multipolar finance, a story that will shape generations. The story of China's $6.1 trillion exit is just beginning. Geopolitical competition, economic sovereignty, and new technologies will keep driving change. The world is searching for a new financial equilibrium, but the outcome is uncertain. America's choices, whether to use the dollar as a weapon or a source of trust, will shape its future role. For China, true currency power requires more openness and reform. The world will watch to see which path each nation takes. This shift affects us all, with profound implications for peace and prosperity. Understanding these forces is the first step to navigating what's ahead. The global order is being remade, one transaction at a time. The next chapter is yet to be written.